Welcome back to the channel, guys. I'm your host, Buckning, and today we're going to give you an update on the portfolio for the end of the week here. It has been quite a day with everything doing its thing, and I think the question is, what do we do now? And so if you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. And so we'll go through the portfolio, we'll go through the buys we made today, and then we'll just update our dividend tracker, update you guys on the performance of the portfolio, and we'll talk about that and maybe what the next steps are in a time like this, especially for me, and what my strategy is moving forward. Because the strategy is always happening every single day, every week when we're making purchases. Do we got to shift a little bit? And so without further ado, the portfolio today closed out at the end of the week at $11,619.61. We are down $187.80 on the day, down 1.59%. For the 1 week, we are down $158.23, down 1.34%. For the 1 month, we are down $275.48, down 2.32%. For the 3 months, we are up $23.35, up 0.2%. For the 1 year, we are up $1,273.28, up 12.31%. And for the all, we're up $1,914.61, up 19.73%. So to go through what we purchased today, it was a new purchase. It wasn't your typical Cisco Systems Inc., which we've been making purchases over the past month and a bit now. And so Bank of Nova Scotia was the stock that we made a purchase in. So our total position value of $1,020.72. We now own 12 shares. Average price of getting in for us is $69.54. A percentage of the portfolio it holds is 8.83%. Today's return was down $15.54. But our total return since owning the position is $186.30, up 22.33%. As you can see in here, we did make a purchase at $85.64 Canadian. However, it did close out at $85.06. So we're down a few cents there. And as we do every time we make a purchase of a full share, we do purchase a fractional share of VFV, which is the Vanguard S&P 500 Index ETF, closing out at $96.42, down $1.71 today, down 1.74%. I'm not going to go through today's return because it's completely off, and total return is probably off as well. But as you can see here, we purchased a fractional share at 0.2585 of a share at $96.71 at the price, which is $25 total. And I think we purchased lower than what it closed out at. No, we missed it by like 30 cents. And we have $62.08 left in the cash count, and we just have a few things on the watch list. As we head back up here, we will head over to trackyourdividends.com to update that all for you guys here. And so if you're to build a portfolio today without the updated positions, as you can see, the portfolio yield today would be 3.47%. Yield on cost for us is 4.2%. So we are getting a bit of better return as we use dollar cost averaging, continue to make purchases over time, whether it's high, whether it's low. Annual income from dividends would equal out to $395. Portfolio on here is $11,384, up $1,966. As we know, that number is a little bit off, but we'll go ahead and update some positions. So we'll go ahead and add a holding. The ticker symbol for Bank of Nova Scotia is BNS.TO because we are in the Toronto Stock Exchange. Purchased 1 share and we bought it at 90, not 96. We bought it at 85.64. Go ahead and add that holding. And then we'll add another holding from VFV.TO, which is the Vanguard S&P 500 Index Fund with Vanguard, of course. We bought 2.2585 of a share at a cost basis of $96.71. Go ahead and add that holding. And as you can see now, the portfolio is roughly at $11,400 $494. If you to build the portfolio with the updated positions today, you would have 3.47% of a yield. We're currently getting that 4.19, so a little bit of a drop. And annual income is at $399, just about to break that 400 mark. Let's get it. And so Bank of Nova Scotia, as you can see, 12 shares down 136, and the stock price profit that we have made so far in capital gains, $186.24. Now, I'm not paying capital gains because this is a tax-free savings account, if you're aware. Dividend yield today is 4.7, but as you can see, we are getting 5.75% of a yield on our investment, and annual income from dividends is a whopping $48. Head down to VFV. We now have a total of 4 total whole shares, closing out today at $96.42. Our average price of getting in is $99.69. And of course, when we get to the point of making purchases of whole units in this ETF or whole shares in this ETF, this will dramatically drop as we were buying full shares and not fractional shares. But as you can see, we are down $13.12. Apparently. 1.14% of a yield. So you are getting a better yield if you were to buy it today than we are at 1.10%, with a dividend yield for the year at $4.42. And that is trackyourdividends.com. So we have updated that. Now we'll head over to ShareSite to show you the portfolio. So as you can see here, we have updated the positions before we started this video. And capital gains today, we are down 2.06%. Dividends are saving us a bit, coming in at $121.95 total this year at 1.04%, with a little bit of currency gain going on here at $11.26, giving us a 0.10%, which gives our total return portfolio performance in this calendar year, as you can see at the top left here. We are down $108.81, down 0.93%. This is the first time on record that we are negative this year for the performance of this portfolio. We are kind of flatlining. And what does that really mean? So strategy moving forward, of course, is to continue to invest on a weekly basis and try to flatline this and not let it dip as much as possible as we can. The analogy I like to go by is that if you can imagine in the short term, or yourself playing with a yo-yo, if you know what a yo-yo is, and on an escalator. Okay, the yo-yo is always going up and down, and that is the volatility of the market. That is the price fluctuations of stocks on a daily basis, and it's moving faster than the escalator. The escalator is going in one direction, always heading upward, bottom left to the top right, at a very steady pace. Now you're just standing on that escalator, you're not walking up it to make yourself go faster, but you are just standing on the escalator to financial freedom, to those dividends. And the yo-yo represents the fluctuation in the prices. Even with the fluctuation in prices in the stock market, as you can see here, there's a lot of jaggeds up and downs. If we go to since first purchase, you can see the escalator continues to trend upwards and get you to your final destination. And so in this calendar year, I'm not too worried about it. We will continue to make purchases as we go, continue to increase our positions, continue to increase the dividend amounts that we are getting per quarter from the companies we own. And of course, this is a great opportunity. As you can see, today the market was completely down, and it's a great opportunity to get in and not be afraid. Now, I know there's probably some doom and gloomers out there thinking that, no, we shouldn't buy because the market's going to crash. And it's just, I don't think that's reality. I mean, even if it does do that, it's going to get back to where it used to be. I mean, if you're a house owner and you own a house, just because your house goes down in price, in value, doesn't mean you sell it. Am I correct in saying that? I would think so. But if it's going up in price, you just stay and you just wait it out over the years, and eventually you'll get to where you need to go. If we look at the quote unquote international cities that are in Canada, like Toronto or Vancouver, no one's mad that their property value went up quite a bit over the years. And I think that goes for anybody in between. Toronto and Vancouver, in those provinces in between, because I'm sure their values of their homes have gone up as well. And even if it did go down, you're not selling your positions right away. You're not exiting the market or anything like that. It is a long-term investment, just like your stock portfolio should be a long-term investment and not a short-term gain, hoping to have those gains that we had in 2020, 2019 era or 2021. This is just a cycle, I'd like to call it, quote unquote. And it's not something that we should be fearing to exit the market or create any downward selling pressure on any position. And so other than that, guys, hopefully you did enjoy the video. Hopefully you found some sort of value out of there at the end there. And I hope you have a great weekend. Don't forget to leave a like and subscribe. But one thing also is that there is a referral code down below that you can use. And once you fund your account, I will get a free share, but not the actual share, just the value of the share. And we can use that to purchase whatever we want, as well as you get a free share. So we'll go ahead and reveal this reward. And we got some Zynga ZNGA coming in at $11.28. We'll go ahead and deposit that. And we'll go invite later. And that is that. And so as you can see here, Amber, thank you for using the referral code, which is down below in the description below. And same with Kenza, who assisted in getting BlackBerry. I did not show that last time. And so thank you so much for using that. And again, have a great weekend, guys. And thanks for watching, and we'll see you in the next one. Bye.